welcome to the Without the Bank podcast, where you and I are going to talk about all things IBC, the business of banking, utilizing money correctly, and how this will help you grow your business and your wealth. All right, folks, I just got back from our annual Nelson Nash Institute think tank, as Nelson called it, and oh my gosh, was that awesome as usual. You know, if you are a business owner, you know there are people that fill your cup, that make you better, that get you motivated, and then there are those that don't so much. And at the annual think tank, those people are my people, right? It's all of my colleagues. We're all talking infinite banking forever, midnight, 1 o'clock, 2 o'clock, 3 o'clock in the morning, whatever that is. And it is absolutely fantastic. I was in Louisiana speaking at a farm conference, and then I jumped over to Birmingham, and then I went to Kansas to speak at another women's conference. And so that was 6 days in a car with a colleague of mine because we drove. I have little faith that the airlines could have got me to through 9 different flights on time. So we drove it every day, a different hotel. But it was super, super fun to see everybody. It was super fun to be speaking again. I hadn't spoke in person in a couple of years. And so it was just awesome, just absolutely awesome to reconnect with everybody. But one of my biggest takeaways that I want to talk to you about today from Think Tank is one of my colleagues said, premium is not the problem, it is the solution. And so I thought that that was huge, huge, huge. And I really want to visit with you about what that means. Premium is, so many people are like, oh, I can't afford that. I can't do that. Why do I have to pay all this premium the rest of my life, right? You don't have the book Life Without the Bank, get it. Because in there are going to be examples of premium payment, okay? And the first thing, people that don't understand the concept, the first thing that those people ask is, when can I stop paying premium? Or I don't want to put too much premium in. While I was visiting with people after I spoke, I had a young lady come up to me and say, you know what, when we were 22 years old, we had a policy on our in-laws. The premium went up every single year to the point where we could not afford to pay it anymore. Since then, my husband is bitter about life insurance. Okay. This is where people see premium is the problem. And it truly is. In that scenario, premium is the problem because the policy wasn't structured correctly. It was some sort of cost of living increase is what the agent had told her. And so they ultimately ended up getting rid of the policy. She doesn't know what happened to it, if the parents took it over, if it just got canceled, whatever it was. But so many of us have this preconceived notion that we should not be putting premium in. Nelson always said, we go to Walmart to buy our life insurance. We want to pay the least amount of money that we can, when in fact, we should be paying the most. And why should we be paying more premium? Premium makes us money, okay? The more premium we put in, the more money we have in death benefit. The more premium we put in, the more money we have in cash value. The more money we have in cash value, the more interest we make, the more dividends we make, okay? That dividend factor is a formula. Everything in the insurance company's world really is a formula, and I know people get so tired of me saying that, but I really want you guys to understand that there is nothing cut and dry. Life insurance companies actuarially have to know exactly what's going to happen. That is not just one factor in the equation. There has to be a formula behind it. And so when we are talking about dividends, that's based on a formula of how much is going to get paid in, what does that look like, all that good stuff, okay? So the more premium we pay, the more money we make. Now, you guys have heard me talk about the fact that taking loans is not making you money. Because when you take a loan, let's say that you take a $10,000 loan and you pay back $10,000 plus interest, that interest went to the life insurance company, right? The interest did not go back to cash value to increase it. The only interest that will increase cash value is interest you pay above and beyond the interest the insurance company charges you. That extra interest that you pay yourself, to be honest, goes into the policy as a premium payment through paid up additions. It does not go in as an interest payment. Okay? So when we pay premium, it creates more money. That is where the compounding comes from. That's where that dividend comes from again. And so this is so important to understand, because this colleague of mine that mentioned this, it was just this light bulb moment for me. Like, I had never thought of it that way, right? Just because I teach this every single day does not mean that we can't get stuff from other people. We need, even I need somebody to be bouncing ideas off of. I need other practitioners in my life so that we can talk about things. Why you guys think that you can do it on your own, that's not going to happen, people. You are not going to be able to do this on your own. You are going to need a practitioner to help you. Okay, that's where I come in. You can go to your local agent, and that's not going to help, because this isn't what they're going to give you. And so many think, well, I can go to my local agent and get what I need out of Mary Jo's podcast. Really? Because I'm just talking in general terms here. I'm not even talking about what you guys really have in your, what do you have in your finances? How are we thinking about that? What are we doing? Are we taking opportunities? We can't take opportunities. We can't do stuff with the cash value if what? We don't have cash value. So if we're not putting all this money in as premium to create a solution, we never create the solution. We continue to have the problem. Let me say that again. If we don't put money in the policy to create the solution, we never have the solution. Many people, if you are a client listening and you are only paying your minimum premium and you are not filling that policy up and we are not maximizing that policy, how are we ever going to create the solution? Many people say to me, well, Mary Jo, you know what? It takes me $500,000 to run my business a year. I'm borrowing that from the bank. I don't want to. This isn't fast enough. The faster you put, the more money you put in, the faster it grows, the faster we get away from the banking system. So many people want to start so small, and I'm totally okay with that, right? I'm Miss Conservative. I start small on my own stuff. This year I didn't. I bit the bullet a little bit and started another policy, and it was much larger than my other policies. Because we need to get that money moved over so that we can start that solution. We can start creating our own bank. We don't create our own bank by playing small in some aspects. We start small, but we need to grow, right? Don't start, I guess the moral here is don't question this from working if you're not using it correctly. And if we're not thinking correctly, if we think that the premium is the problem, we have it all wrong. If you think that life insurance is bad because the premium is the problem, you got it all wrong. Premium is the solution. It's creating the bank. I'm not going to beat that any more than that because it's really that simple. If you have read Nelson's book, you get it. And if you've not read Nelson's book, you need to go to withoutthebank.com and you need to grab Life Without the Bank and you need to grab Becoming Your Own Banker. Both those books on the shelf there. That's what you need to grab. because without them, we're not going to create a solution. Okay. We should all know what the problem is. And the problem is our banking system. The problem is fractional reserve banking. The problem is our thought process. Those are the problems. And we need to get over those problems. Okay. So think about that. Grab the books, withoutthebank.com. If you have questions, comments, concerns, please email me at maryjo@withoutthebank.com. I will answer your email. I will try to help you best I can. This is what I will not do. I will not tell you what to do with your money via email with a 1 or 2 or 3 or 10 paragraph email. People that are emailing me their life story, I love to hear it. I absolutely love it. But don't ask me to solve all your problems via an email. I need to have a meeting with you. That meeting comes after you've read one of the 2 books. An hour and a half free consultation. I am not going to try to sell you anything. All I need to know is what you have going on. Without that, if somebody sends you numbers, if somebody is telling you what to do without knowing your whole story and you go along with them, that's your fault. I am sorry to tell you, but that is your fault. You did not get scammed. You allowed it to happen. You want to have somebody that is going to truly ask you a ton of questions and get an idea about what is going on. Okay, my friends, that is all I have today. If you need anything, you know where I'm at. If you want to leave a comment below on YouTube, you sure can. Otherwise, you have a fantastic day, and I'll see you in the next podcast.